So finally on this return inwards and return outwards. Oh, Austin, I haven't put you on mute. Oh. Yeah, I think it's the microphone. Sometimes even it happens to me when I join the class, I have to go off and join again before the microphone begins to work. So I'm sure that's the challenge. Okay. So I have no you can check the participant. You see that you are not muted at all. Especially when you click mute on mute. Okay, so but you can share your thoughts in the chat. Okay. So the returning was issue. I think you now appreciate that this is where your debtors or customers return goods back to you. So because the debtors are returning the goods back to you, how much they owe you, the debt will reduce. That's why we have decrease in asset debtors. But of course, you are going to receive the goods from them, so your stock will increase. And so we have the increase in asset stock. Great. The last one, which is the return outwards. This is where this time is the business that is returning the goods to the supplier. So the business is giving out the goods. So our stock or the business stock is going to decrease. Right. I think we all appreciate that. Because the business is sending goods outside to the supplier. So there will be a decrease in asset stock, but that will be as a result of return outwards. And then the second impact will be a decrease in liability, which is the creditor. Okay, so here again, let me give an example so that you understand. Omega accounting class, we are a business, okay, and we sell erasers. So we went to Malcolm to buy eraser. So Malcolm is our supplier. Malcolm supplies us with the eraser and then we sell to our customers. So when we went to Malcolm to buy the eraser, we bought eraser worth 300 Ghana cedis. Now, when we got to our shop, we saw that some of the erasers are not erasers. Okay, they are toffees. So what do? We return those toffees back to Malcolm, and that is return out. So Omega accounting business is returning the non-erasers, that's the toffee, back to Malcolm, our supplier. So the scenarios are that our stock will decrease because we are taking goods out of the business. And again, if we owed Malcolm 300 Ghana cedis for the eraser Malcolm supplied to us, because we are returning back some of the goods back to Malcolm, right? We will no more be owing Malcolm 300 because Malcolm will have to less the total value we have returned back to them. So if the value is say 50, then we are now going to owe Malcolm 250 and not 300. So it means that the liability creditor Malcolm has decreased. That's why we have decrease in liability credit. So that's for the return outwards, or which is also sometimes referred to as purchases returns. Are we okay, professors?
Yes, please.
Great. So thanks be to God, we have dealt with the 10 or now 11 basic transactions that you'll be dealing with as far as accounting is concerned and recording business transaction is in the picture. So I've done the summaries here for you, right? Investment by the owner, acquisition of asset, acquisition of that's either on cash or credit basis, sale of goods, purchase of goods. I've done all those summaries here for us, but I want my professors to appreciate the discussions we've done so far. So let me do a summary for us so that it will be a guide. If you are learning, make sure at least you understand each of these 11 transactions we've looked at. So the first one was investment by the owner. Okay. The second was sale of goods. And that one, you all appreciate that we can sell and pay cash. So we have cash sales. And then we can also have credit sales. The credit sales is where we didn't take the money or the customer didn't pay. Then we went to the purchase of goods. This time the business is buying the goods, right? The opposite of selling. So that one too, we have cash purchases or credit purchases. The cash purchases is where the business paid the supplier with money, either cash or check. And the credit is where we didn't pay the supplier. So the supplier became a creditor, liability creditor. Good. Then we saw acquisition of assets or buying an asset, right? And that one too, we saw you can buy an asset on credit or you can buy paying cash or check. Then we went to fifth, which was acquisition of a loan, when the business goes to take a loan. Acquisition of a loan. Then went to settlement of a liability, when the business is paying a liability. Then I think seven was payment of expense. 8 was receipt of income, when the business receives income. Then 9 was the drawings we spoke about. And I believe professors appreciate that drawings refers to the amount or value of resources the owner has taken from the business for his or her private use. Then finally, we saw number 10, return inwards and return outwards, number 11. Okay. So if you appreciate these 11 transactions, professors, trust me, if we start recording transactions, you would not have any issue at all. Now, in concluding our class for today, I want to share with you something in your manual so that you appreciate what we have been discussing so far. Okay, so you see an activity here. I would have wished to give you that activity, but I would have to solve questions with you, one or two, before I begin to give you activities. Or maybe I can test your pulse. So it says, study the transaction below, right? And you'll be required to state the effects. Okay. So you are to prepare a table to show the effect, whether increase or decrease of the transaction on asset, capital, and liabilities, right? It's a typical exams question. So you see here, first, March, started business with 1,000 Ghana cedi. Second, bought goods worth 520 on credit from Kiki Ventures. Fourth, contracted a loan. So what I want my professors to appreciate is that when you see the transaction, you should be able to remember that, okay, this transaction is leading me to investment by the owner, or this transaction is a sale of goods on credit, or a sale of goods paying cash or check, or this transaction is acquisition of an asset. If you can be able to draw that link, then you can as well get the effect easily, right? So I think we have some few minutes. Yeah, we have some minutes. So let's try to digest the question we have on the screen. So this relates to Mr. Kachitu, a sole trader for the month of March. The first transaction says, started business with 1,000 Ghana cedis. Professors, what transaction is this? So Mr. Kachito started business with 1,000 cedis. Yes, Prof. Portia.
Say, please, investment of owner.
Okay, so investment made by the owner, right? And the owner is starting a business, so he's investing in the business. That's true. Okay, so you can appreciate that this Mr. Kachito is starting a business with 1,000 Ghana cedis cash, right? So there will be increase in capital and increase in asset cash because he started the business with cash, 1,000 Ghana cedis. If it was check, the question would have added that started business with 1,000 Ghana cedi check, right? So where check is not attached, then it's cash. If it was a building, the business would have, or the question would have said, started business with 1,000 worth of building, or a building of 1,000 Ghana cedis. Great. Let's look at the second one. Bought goods worth 520 Ghana cedis on credit from Kiki Ventures. Bought goods. Portia, I think this one I won't call you. I want to assess my other professors if they are with me. Other professors. Okay, I see Austin. Austin, let's try your microphone and see. Oh, Austin, please type in the chat for me. Okay. Prof. Oswell, let me hear you on this one.
Please purchase of this.
Exactly, purchase of goods. But was it on credit or cash basis? I think it's on credit, right? Because the question indicates on credit. Yeah. So Portia and Akoli, you take the effects. So Portia will take one and Akoli or Augustine will take the other.
So say there will be increase in assets by stock.
Okay. So there will be increase in asset stock. And then Mr. Augustine Akoli Mensah, what is the other?
There will also be increase in liability.
Okay, so there will be increase in liability creditor. But you see here, the name of the creditor has been given. So you would have to indicate that Kiki Ventures is the creditor here. Okay, great. I see a question there for me. Will you get in trouble if you don't return excess stock? Well, if you don't return it, you will definitely pay for it, isn't it? Like you go to a chop bar, you order to get rice 5 cedi, macaroni 2 cedi, no fish. And then they give you the food and you see chicken thigh there and egg, and you see normal fish too. You would ask question that, hey, madam, I didn't ask for this one, so is it free? Until they tell you it's free. If you chop it, you pay. Well, it's a matter of legal issues. Sometimes if you take it to court and you get a good lawyer, you can be defended that yes, you didn't order for it, they gave it to you, you had no option. But it's not, you can also be held responsible for that, right? So sometimes when you get free things, you have to do due diligence to ask questions. In the case of a business relationship, if your supplier makes a mistake and supplies you with excess stock, you check with the supplier, is it a free stock you are giving me, or I would have to pay? You have to do that due diligence. Okay. So, Mr. Akoli, I can't give a straight answer that you get in trouble or you won't get in trouble. It depends on the contracts or the transaction you have with the person, right? But do due diligence. Always confirm from the person. Okay. So I can sense that you now appreciate what we are doing, right? Now I want to skip and go to okay, let me not skip since we have time. The next one is bought motor vehicle, paying by check. So this one is the business buying an asset, right? Portia, I'm sorry, I've answered this myself. So the business is buying an asset or acquiring an asset, but the business paid check. Okay, so there's an increase in asset, that's the vehicle, but the business will be getting a vehicle. But the business will also be losing money through the bank. So there will be decrease in asset bank, right? Then the sixth one says, oh, in fact, it hurts me that I can't get Akoli to speak because of his microphone. Akoli, don't worry, today it's not only you. Some of the professors are using our microphones and our throat or something else. Okay, the sixth one is cash purchases of 270 Ghana cedis. I think you all appreciate that the business is purchasing goods using cash, right? Now, as we move on, you begin to get the point that when you see purchases and nothing is attached to it, maybe a land or building or vehicle, then it means it's goods. They purchase goods, right? Okay, so that will be increase in asset stock and then decrease in asset cash because we paid cash. The seventh one, paid Kiki Ventures, 520 Ghana cedis cash. What transaction? Based on the 11 transactions we saw, which of them applies to this one? Paid Kiki, 750. Is it a purchase of goods or acquisition of asset or settlement of? Okay, who is ready to answer? Josephine, you want to try this? Prof. Eugenia. Prof. Bridget. Paid Kiki Ventures, 520 cedis. Ghana cedi cash. Okay, let me hear from ladies first. Portia.
Sir, it's the settlement of liability.
Settlement of a liability. Josephine, you wanted to say something. Go ahead.
Sir, please, I'm not sure, but I wanted to say payment of expense.
Oh, okay. Yeah, so it's a payment, all right, but it's not an expense because when you check Kiki Ventures, right? From the previous transaction, we bought goods from this business on credit. So we owe Kiki. So Kiki was a creditor, a liability, right? So it's a payment of a liability or settlement of a liability, as Portia rightly put it. So that's awesome. Right? So the expenses will be either rent, wages, electricity bill, like those kind of costs you incur. Okay. But here we paid Kiki, and Kiki is somebody that we owed because we bought goods from that shop and didn't pay. Okay. Then the eighth one is this question, either Bridget or Oswell should answer it, or even Eugenia. So please listen. Withdrew 200 Ghana cedis for private use from the bank. Please, what is the general term for the owner withdrawing a resource for private use? And I only want answers from, okay, Prof. Oswald is up. I want to hear from Bridget and Eugenia. Prof. Bridget, this one, you have to get it for me. Otherwise, I'm coming to your home right now to eat all your food. Okay, as Oswald has raised the hand, I know Prof. Bridget. Okay, Eugenia is also available. Let me hear from the two of you. Eugenia, Bridget. Oh, is it network? I can't seem to hear. Prof. Kujo would have answered, but I'm sure his network too. Please, all professors unmute and tell me the answer. What is the name given to the owner? The amount
Drawings.
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 Drawings. Yes. Drawings.
Drawings.
Drawings. So that is drawings. So in this case, there will be decrease in capital and decrease in asset. You see, Mr. Kachito made the drawings from the bank. So the bank will decrease. So asset bank will decrease. Decrease in asset bank. Okay, so you see, now I think my professors appreciate, so I can give them a set of transactions for them to, answer and put on their private page for me to mark. Okay, so normally you can present your answer in this form. You indicate the transaction and then you show the effects. You can go this way where you have asset, capital, liability columns. So if it led to increase in asset and increase in capital, you indicate. Okay. Or you can go the normal way as I've been doing. Okay. So you just write the transaction, you indicate increase in asset, decrease in. But make sure to add the specific assets. Okay. So if it is a debtor, indicate a debtor. If it's a land. If it is a creditor and the name of the creditor is given, indicate the name of the creditor. Okay, so my able professors, I think today I'm glad we have been able to exhaust 11 transactions, right? We did 2 previously, we added 9. They are not plenty. Take them one by one. From now till we meet on Wednesday, you can take them one by one, right? Sale of goods, purchase of goods, purchase of an asset or acquisition of an asset, drawings. Okay, take them one by one. You can plan it when you are eating your breakfast. You look at one transaction. When you are eating your lunch, one transaction. When you are eating supper, one transaction. When you are going to sleep, one transaction. So you can do 4 transactions in a day. Within 3 days, you have done in excess of, you've done all the 11, right? Okay, so any questions from any of you before I wrap up and sign off? Okay. So my concluding statements are that, professors, you are not a magician or an AI to get all the 11 transactions at a go. So I appreciate those of you who might have issues here and there, but please, I would share the recordings. I'll try and do that before close of today. Watch it, take your time, ask me questions, either through your private page or my direct message. And all together, we would grow up into a very professional accountant. Until then, stay safe and be good. Eat well, release stress, laugh when you have to. Get angry sometimes, not all the times, but don't show it. I don't know why I'm saying all these things. Please, let me say bye-bye before I begin to say what I'm not supposed to say. So I'll see you when I see you. Bye-bye.
Bye.
Bye.
Bye, said.
Bye.
Bye, everyone.
Bye, 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 bye.
Bye, bye,
Bye.
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 Bye, bye.
Mm.
Bye.